Today extended the recent losing streak as year-end liquidity dwindled and foreign outflows continued to weigh on market sentiment. Good evening, and welcome to your post-market breakdown for Monday, 29th December 2025. Today saw Indian markets extend their slide, with Nifty slipping below the 26,000 mark to close till the 25,942 and Bank Nifty around the 58,900 to 59,000 zone, indicating pressure in both broad market and banking leadership. Here are the key trigger levels for the next session. Nifty. Bullish trigger, above till the 26,150, 26,200. Bearish trigger, below till the 25,800. Bank Nifty. Bullish trigger, above till the 59,200, 59,500. Bearish trigger, below till the 58,800. The first 15 minutes tomorrow decide direction. That phrase holds especially true now because today's price rejection near key levels signals next day confirmation risk, not trend exhaustion. Global market overview, why it matters for India. Global markets were muted and cautious, showing range-bound action through most of the session. Asian peers displayed limited participation amid the holiday season, while US and European markets lacked strong catalysts, a backdrop that often leads Indian markets to trade on internal technicals and flows rather than global leadership cues. Persistent foreign outflows in India, recorded as one of the largest on record in 2025, have capped bullish momentum and kept downside risk alive. This global indifference shifts the gravity of direction onto domestic structure, options positioning, and flow psychology, rather than external sentiment drivers. Indian market overview. Today's session reflected broad-based weakness and profit booking, especially in cyclical and growth names. Nifty's break below the psychologically important 26,000 region coupled with Bank Nifty's slip signals near-term risk bias over neutral consolidation. Unlike strong trend days characterized by conviction flows, today's move was gradual, reflecting price exhaustion rather than panic. Sector performance, rotation and sentiment. Today's sector performance theme. Stocks segments underperforming. IT and realty stocks saw significant selling pressure on valuation concerns. Banking names lagged, with mixed performances across major banks. Sectors showing resilience. Metal and commodities held up relatively better amid strong global demand signals earlier, though profit-taking was observed later. Select midcaps showed selective strength despite broad weakness. This rotation pattern suggests capital reallocation, not broad liquidation, and that participants are managing exposure rather than exiting the market outright. Top gainers and losers, contextual read. Top gainers, selective strength. Vedant, strength amid commodity price persistence. Coforge, stock-specific acquisition news lifting sentiment. Select metals and cyclicals, attracted capital relative to weak defensive themes. Top losers, pressure points. IndusInd Bank, underperformed banking peers, signaling sector stress. Kotak Mahindra Bank, mild decline amid broad financial drag. HDFC Bank, defensive bank sliding albeit outperforming broad market slightly. These moves reflect risk aversion layered on profit trimming, not sudden value destruction. FII-DII activity, flow signals. Provisional data and price action confirm. Foreign portfolio investors continued selling, contributing to market pressure. Domestic flows absorbed some supply, particularly around defensive supports, a tentative sign of buyers stepping in selectively. This dynamic underscores a tug-of-war between foreigners exiting and locals absorbing, a pattern often seen during seasonal volatility. Technical analysis, Nifty structure. Support zones, till the 25,800 till the 25,650. Resistance zones, till the 26,150 till the 26,300. Nifty's inability to hold above 26,000 and rejection near the 26,200 area signals near-term bearish pressure, especially if support breaks with conviction. Technical analysis, Bank Nifty structure. Based on the confirmed closing and historical range. Support, till the 58,800, 58,500. Resistance, till the 59,200, 59,500. Bank Nifty's failure to sustain above 59,200 and early weakness around 58,900 suggests a range drift with bearish undertone unless reversal comes swiftly. Nifty options analysis. Today's option structure showed high call open interest near upper resistance, writers defending upside conviction. Strong put open interest near support levels, writing support that prevents deep drops. In market terms, call writers are reluctant to lose control near resistance. Put writers are holding the downside like a floor. Buyers trapped inside the band bleed time decay. This creates a tight compression zone, a battle where neither side yields easily. When this kind of compression breaks, the reaction is fast, sharp, and momentum-driven. Bank Nifty options analysis, spoken market language. For Bank Nifty, call OI clustering near resistance zone implies sellers controlling upside for now. Put OI near lower support implies defensive positioning on the downside. When both sides defend strongly, price squeezes into a tighter band, ripe for explosive moves once one side breaks. And since Bank Nifty tends to lead broad index direction, its breakout will likely set the tone for Nifty's trend next. Market psychology, read the underlying sentiment. Today was not panic selling, it was controlled profit booking in a thinning market. Participants are cautious, selective, avoiding fresh aggressive bets. This often precedes directional moves, not neutral stagnation. Markets rarely trend during fear or greed, they tend to break ranges once focus shifts from uncertainty to clarity. Important news and drivers. Domestic drivers. Year-end flow adjustments. Continued foreign outflows capping gains. Lack of strong macro news internally. Global drivers. Muted global participation. Low volatility overseas. Continued macro watch on US rate expectations. No major shock headlines today, and that itself means structure and positioning drove price action. Tomorrow's market outlook. Nifty. Sustained above tilde 26,200 bullish follow through. Collapse below tilde 25,800 deeper retracement. BankNifty. Above tilde 59,259,500 potential leadership reboot. Below tilde 58,800 range extension. The first 15 minutes tomorrow will break the uncertainty band. Watchlist for tomorrow, with context. Educational, not trade advice. Vedant, metal sector resilience. Coforge, specific deal-driven strength. IndusInd Bank, banking weakness signal. Kotak Mahindra Bank, relative performance gauge. HDFC Bank, defensive bank buffer. Select IT names, where rotation risk shows. Small cap cyclicals, participation pulse check. These names tell us about flow preferences and risk appetite, not directional calls. Mini educational insert. Why compression precedes breakouts? When both call and put writers are strong at key levels. Price tightens. Volatility contracts. Time decay penalizes buyers. Once price escapes that band, writers unwind. Momentum accelerates. This is why patience before confirmation matters more than guessing direction. In summary, today's market closed lower, not in panic but in controlled reservation. Nifty, 25,942. BankNifty, tilde 58,932. Times compression increased. Times options bands held. Times participants cautious. Tomorrow's first 15 minutes will set direction. This is structure, not speculation.